I had someone ask me just a little while ago about mortgage insurance, private mortgage insurance, and how he might be able to stop paying it. When you buy a house and you put less than 80% down on the house typically, so you're financing more than 80% of the purchase price, you're typically required by your lender to have private mortgage insurance, PMI, you've heard people speak of, and that can be an upfront premium that you pay. It can be a monthly amount that you pay. It could be both. And this person, because it's part of his monthly payment, would like to get rid of it. So he's thinking that the value of his house now is such that what he owes on it is below 80% of that value, and that his bank should drop the mortgage insurance. In fact, they will drop the mortgage insurance if that is true. Now, some might have that limit set at 75%. You might need to be where your loan is 70%, 75%, or 70% of the value or less. So it depends on your lender and your situation, but he wanted to know how to do it. Well, first of all, you contact your lender and you let them know that you think such is the case. And they will require an appraisal of the property to make sure that it has risen in value, your loan amount has dropped, and that ratio's where they like it. Before you pay for an appraisal, however, if you're required to pay for one, call your local realtor, call the man or woman who helped you buy your house, and tell them you're contemplating this, and see if they think, like you suspect, that the value is high enough now to where your loan amount is below a certain percentage and you may be able to get your mortgage insurance dropped. Your realtor will be able to tell you, yes, I think that's the case. If they tell you no, well then save your money, revisit it in a year or so, and don't spend money to have the house appraised. But if the realtor says yes, it's definitely at a place where what you owe on it is below a certain percentage and you should be able to stop your mortgage insurance, then start that process with your bank. And if it ends up being true, well, then that will save you some money. In fact, a closing attorney I use on a regular basis at the closing will show the buyer an amortization schedule with every payment over the life of that loan. And he will mark a payment at a certain date in the future when there is just about no question that the loan amount is going to drop below a certain percentage, the percentage of the value of the house that they're paying now, and they can get rid of their mortgage insurance. So he'll tell that buyer, just remember this date some kind of way, put it in your phone, put a note to yourself somewhere so that on that date you can contact the mortgage company and stop paying mortgage insurance. It's money that you don't need to pay at that point, and that's good advice. The thing is, you might be eligible to have that mortgage insurance dropped before that date if the values go up by a certain percentage. So, little insight on PMI, private mortgage insurance today. I hope it helped.